Hi, and welcome to ania Accounting. My name is Peter. Today, let's dive into controlled foreign companies, or in short, CFCs, and how they are regulated in Denmark. If you've been keeping an eye on the business world, you might have noticed a trend of corporations offshoring their subsidiaries to countries with lower taxes. This is what the Danish tax agency has set out to try and avoid. Firstly, what even is a CFC? It's short for Controlled Foreign Companies, sometimes also known as Controlled Financial Companies. The primary goal of having CFC rules is preventing companies from avoiding higher taxes in their home countries. But just remember, CFC rules can vary depending on where your company is located. So, why the buzz about CFCs in Denmark? A little backstory. The EU Commission nudged Denmark because there were some communication hiccups regarding implementing CFC rules. The main objective? Stopping companies from shifting profits to countries with little or no tax. Taking the cue, the Danish government rolled out a new law regarding CFC taxation, and it's been active for a while now. Now, the big question. How are CFCs taxed in Denmark? If you are a Denmark-based company, you generally won't be taxed on profit from your international subsidiaries unless they're considered CFCs with CFC income. And how is that determined? Two main points to remember. First, if your Danish company and its group members directly or indirectly have over 50% ownership or control more than half the voting rights in a subsidiary. And second, more than a third of the subsidiary's income, as per our Danish tax laws, comes from predefined CFC income types. Think interest, royalties, capital gains, and more. And speaking of those CFC income types, CFC income can include interests, capital gains, dividends, income from selling intangibles, profit from insurance and banking, and even income from CO2 quotas and credits. Wondering which countries are considered low tax in this context of CFCs? Well, it's not as straightforward as you'd think. Denmark doesn't have a definitive list of countries. So it's more about the type of income rather than the country it originates from. Before we wrap up, here's a tidbit to consider. If a controlled foreign subsidiary of a Danish company has less than a third of their income as CFC income, they're exempt from CFC taxation in Denmark. CFC rules in Denmark are intricate, to say the least. If you think you might be affected, it's always a good idea to have a talk with an accountant. That's all for today. Thank you for watching. My name is Peter, and we are ania Accounting.